With a remortgage with capital raise, you may be able to release some of the equity locked in your property into cash, so that you can use the cash for a number of purposes. Mortgage lenders will typically let you raise capital on your property for a number of legitimate reasons, such as home improvements, debt consolidation, or to buy another property, as well as for other personal or business reasons. Not all lenders will consider all these reasons. Also, some lenders may let you raise more money than others, and product rates will vary by lender. Let's take a look at these purposes in a little more detail. First, let's take a look at home improvements. Whether you have a big or a small project on your home, such as a new kitchen or a loft extension, you may be able to release the equity that you need to pay for these projects. The alternative to a remortgage is a personal loan. Personal loans are typically for 5 to 7 years. With a mortgage, you can spread the amount you borrow over a longer period of time and generally on a lower rate. Therefore, your monthly payment will typically be lower. If you have debts on things like credit cards and personal loans, this debt can end up on very expensive rates, especially for credit cards. With a remortgage, you can consolidate this more expensive debt onto your mortgage. The mortgage generally has a lower rate than, say, credit cards. In addition, by spreading the debt on a longer term with a mortgage, you will reduce your monthly debt payment. And so your aim is to improve your monthly budget and get into a better financial health. With a remortgage, you can also raise cash to use as a deposit towards the purchase of an additional property, such as the purchase of a buy-to-let or of a second home, or you may even decide to move and buy a new home and put your current property up for rental instead of selling it. So a remortgage with capital raise can also be a good way to build your property investment portfolio. Personal use are things like buying a car or paying for your children's education or gifting money to a family member or even paying for a dream holiday that you had always put off all these years. However, not every lender will accept this form of capital raise, and eligibility criteria vary. Some lenders will let you capital raise on your home in order to get funds for your business. However, not many lenders will consider this form of capital raise, and as this is a specialist field, you would want to seek guidance from a mortgage broker. There are essentially 3 ways to raise money with a mortgage. First, a full remortgage. Second, a further advance, or third, a second charge loan. A full remortgage may be suitable if you are coming to the end of your initial mortgage deal, such as the end of your fixed rate. If you are still in your initial mortgage deal, you may want to do a further advance or second charge instead, as otherwise you may pay an early redemption charge to leave your current mortgage deal early. Ultimately, you will want to check how much you can borrow across different lenders, understand if you meet eligibility and underwriting criteria, and review the options available with product rates and terms. The amount that you can borrow will depend predominantly on 2 things. First, how much you earn, and second, how much equity you have in your property. Mortgage lenders will typically let you borrow up to 90% LTV. Some may still consider 95% LTV, but criteria change regularly based on the state of the economy and the property market. Your mortgage experts have plenty of experience helping people remortgage for capital raise. They know exactly what you will need at each stage of the process so that you are as prepared as possible for application, thereby increasing your chances of success. Contact us today to speak with a friendly advisor or drop us a question.